Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Well, situation on the gold market mostly reminds the situation on the euro currency. A lot of similar things is going on here, and actually the major question the same. So the market is keep going directly to the XLP, or still we could get some downside, more extended action before upward action continues. So on Monday, actually it was intraday setup for long entry that we discussed in the weekly report, because market has completed all conditions that we have set for this scenario, and as a result we've got this upward continuation here on gold. Currently, if you have taken the long position, you could think what to do with it, either to book the profit or protect your position with break-even stop, because we still suggest that CPI numbers on Thursday have the big chances to become positive, I mean stronger than expected. That should provide some support to the dollar. And some reaction on the gold also could happen to the downside. Maybe it will not be as significant as to 1825 area, which is actually great. If we will get the gold around this area, it will be a nice opportunity to go long. This is mostly the same area as on the euro currency 2150, where we have 2050 area, where we have also confluence accompanied with the daily reversal. So this is technically just perfect area, but the major problem is that we could not get this ABCD pattern directly to this level. So with all this stuff in mind, we need to keep an eye on the few things. So first of all, since market stands currently in the reaction on the short-term target, we need to control this retracement to keep the bullish context, short-term bullish context, and chances to proceed to the XOP immediately. Market has to stay above major fib levels on this most recent swing. And in this case, we could suggest that market is forming the butterfly and it keeps chance on a possible upward continuation. So here is our first task, to control these levels and see market response to supports, whether we will be able to use it for a long entry. On a daily chart, but that is mostly for intraday trading. On the daily chart, as we said recently, it's difficult to force yourself for position taking just because it's not very attractive. Risk-reward ratio approximately equals in the current point, and you need to wait for a pullback here. Perfectly, market will reach this level within a couple of weeks maybe. But anyway, if you intend to go long on a daily chart, you need to wait for some pullback when the risk reward will become more attractive and you will get the clear pattern that you could use for trading. For instance, this butterfly. In this case, it will be something that you could use for position taking. And in current moment, on the daily chart, I think that situation is not ready yet for position taking. Speaking about the direct upward breakout, so actually we could repeat only the same thing. Here, only if market will break above the 1910 area and preferably return back in the channel, well, in this case we could say that indeed market's going straight up forward, without any pullback, without any butterfly, so it will be just straightforward action. But in the current circumstances, with coming to the CPI and probably some position taking before the number release, and taking into consideration that CPI might be better than expected and providing strong inflation numbers, well, in this case, this scenario looks not very probable. That's why what we could keep an eye on is on the hourly chart. Take a look. Market has completed XOP target around 618 level that has been barely broken. So we could keep an eye on the possible retracement levels and market response to it. So here's was on our entry level recently. It was confidence support, if you remember. We said keep an eye on response. You could try and take the position here, but control how market behaves, and market should not definitely drop below 1868, below the C point. All these conditions have been completed. Market shows healthy pullback, healthy upward action. Currently, we have the bearish divergence, completion of the XOP target around major 618 level. So here could be different reaction, but if market hopefully will show some pullback, maybe even to the deeper level, that will be the chance to take the long position with the daily pattern, which is butterfly. So what levels we have here for controlling the overall situation? It's mostly confluence around 1880, 1885. So as you could see, this thrusting candle. If you will take a look at it, you will see that this will be the confluence. And still levels to keep an eye on is mostly 1880, 1885, a strong level, in 1873. So since we do not know definitely from which point market could reestablish upward action, you could use, as usual, split entry. So taking some part here with the pullback, if market will form the hand and shoulders here, it's also possible. You could out on some minor profit, or just keep the position, this ABCD pattern based on the hand and shoulders back to the 1873. So will be another chance to go along. But market has to stay above one of these two levels. So breaking down and raising this rally, dropping below the C point here, this will tell you that probably this deeper downside action is growing on the daily chart. So for a short-term trading, that's probably will be some vital area. It's bottom of this thrusting candle, 1868 again, to make the judgment on the validity of this setup. If you'd like to follow it, then you need to make a decision on position taken on these two levels. The one thing that we should escape is, of course, this type of action. So if you will see this collapse here, through the confluence, from the low levels back to the bottom of this, so it would be better to not take position immediately. So that's currently what we have on the gold.